Would love to kind of start out by welcoming everyone and thanking you all for joining this latest episode of Powering Business with Blockchain. For those who may be new to this series, Powering Business with Blockchain hosts business leaders and executives from across various industries to discuss really how they're thinking about blockchain technology in the context of solving real-world pain points and driving forward real-world strategic and business opportunities and imperatives. Through these sessions, we get to hear insights on what's motivating various companies across a whole host of different industries to really create and execute digital asset strategies and how these efforts have evolved over time. And importantly, we get to glimpse into real-world use cases and applications. By way of introduction, I'm Morgan Krupetsky, Senior Director of Business Development for Institutions and Capital Markets at Avalanche. Today, I'm really excited to be joined by several of our key partners who will be delving into a recent proof of concept they collectively drove forward around private market tokenization while leveraging the Avalanche Spruce network, which we'll get into. So with that, I know we have a really awesome group of participants. Love to see many women on this panel. It's very exciting. With that, let me ask to maybe go around. Let me ask each of you guys to start with a quick introduction of yourself, your role, obviously your firm, high-level overview also of how kind of each of your teams is considering your blockchain and digital asset strategy overall, and then we'll dive into obviously the proof of concept and the various use cases that we drove forward. So maybe Ioana, if you want to start, and we can go from there.
We're happy to start, and thank you again for having me, and it's great to be here with everyone. As Morgan mentioned, my name's Ioana. I'm part of the Citi Digital Assets capability. I look after partnerships. In terms of how we're thinking about digital assets at Citi, we're thinking about it through a variety of different lenses as it comes to the opportunities provided by this new emerging technology. But I would say that the primary lenses is through thinking about it through the eyes of our clients and how to better serve their needs, what's possible, obviously from a regulatory standpoint, and a legal framework, and then also what technology ultimately enables in terms of either cost efficiencies, operational efficiencies, and also new capabilities. We're organized at a high level, and I think it's important from an organizational standpoint as a sort of hub and spoke model in terms of both central capabilities as well as dedicated capabilities within the various lines of business to support our clients more directly, to kind of specific products and services, but again, kind of keep this horizontal view in mind in terms of the integration of these various solutions and using this new technology as a way to hopefully help us avoid some of the silos that traditional financial services have had in the past. Broadly speaking, in terms of our kind of priorities, as you mentioned, or our strategic focuses from a digital asset standpoint, we're looking kind of across the board. Clearly, securities and funds is something that we're working on in partnership with our clients. That's why I'm here today and kind of thinking through that. Digital money is another capability that is important for us based on those lenses that I mentioned earlier. And then also other what we call foundational capabilities in the space that underlie our product strategy. So for example, custody, thinking through kind of trading readiness, and then also how to support the broader enablement or the broader capability, the broader distribution via different capabilities and enabling those.
Well, thanks, Ioana. I think to your point, given sell-side institutions, which we'll get into, kind of position in the broader industry, this tech definitely kind of permeates into several different business lines, really end to end in certain asset management life cycles and practices. And so to your point, we'll get into some of that today, but it's really interesting to kind of see that, particularly that hub and spoke model that you spoke about, and how it kind of touches the various businesses and business lines. With that, maybe Meredith, let me hand it over to you for a similar intro.
Sure. And hi, thanks so much again for having us. This is, I'm excited for this conversation. So I'm Maredith Hannon. I lead business development for WisdomTree's digital assets efforts. For those who don't know WisdomTree, we're an over $100 billion asset manager. Traditionally, we're in ETFs, but now we're doing a lot of work in both tokenization as well as broadly crypto as an asset class. And we really see digital assets as from two angles. There's a possibility of having delivering crypto into mainstream, meaning a Bitcoin ETF through a traditional wrapper, but then really in what the focus is on bringing mainstream assets into this digital assets or crypto ecosystem, which is what this proof of concept really focused on. So very excited about this effort. And what this also really showcases is a lot of the work that we're doing now with institutions and more business to business like opportunities to show what this infrastructure and this technology can really do to help create some efficiency. So excited to talk about that today.
Thanks, Meredith. Mark? I don't think we can hear you, Mark, or is it just me?
Can't hear me at all?
Now we can.
Oh. Thanks for having me, Morgan. Really appreciate it. And it's great to be on the panel. It was such a pleasure to work with everybody else that's on this panel. We really had a lot of fun in pursuing this project. And so just want to say thank you to all of you for the opportunity. I'm Mark Garabedian. I head up digital assets and tokenization for Wellington Management. We're an active manager and we've been around for long time. And, you know, for my role and my remit, really, the very first pillar that I focus on is education. There's a lot of focus in the space on, you know, crypto assets and Bitcoin. Tokenization is what brought me into the space when I started to learn about it and just what the potential of tokenization brings to our industry and to our ecosystem. And so I do a lot of internal education, explaining what tokenization is, how it works, and how it can transform our business. I also focus on, you know, new potential client channels, new distribution paths, which we explored through this proof of concept. I focus on the potential to touch digital assets as investment products for our clients and investment vehicles. And then lastly, I focus on how blockchains can potentially transform different business operations, particularly around data and infrastructure within the firm. My background is in trading, and so I've been in trading for all my life. The first time that I experienced trading on chain, I sort of knew the capabilities that it potentially brings, where we're increasing the velocity of money and decreasing risk throughout the ecosystem. So again, thanks for having me.
Thanks, Mark. And last but not least, Ada.
Thanks, Morgan. And hi, everyone. Nice to see you all. I'm Ioana Kokoshi. I lead the business development team at DTCC Digital Assets. DTCC Digital Assets is a newly formed business in DTCC, which is the central repository of U.S. financial markets that provides post-trade infrastructure for capital markets in the U.S. and globally. We've had a fun journey over the last couple of years. Last couple of months, I should say, even though the past years have been fun with our partners here. But as we were going through the POC that we did with the partners here, my company, formerly Security, now DTCC Digital Assets, went through an acquisition by DTCC. That was something very monumental within the blockchain tokenization ecosystem, because it was one of the first moves where a major financial U.S. institution and the repository of U.S. financial markets that provides settlement and clearing services made the move to acquire technology that provides tokenization services for assets in digital form. As you all may know, DTCC provides services to across to asset managers, broker-dealers, insurance companies, and many providers or participants in the capital market space. And the fact that they entered the digital asset space by acquiring a technology provider was something that showed a seriousness in the industry for the next chapter of digital assets. as we were doing the project with our partners here, it was very evident that things that we learned through the course of the project, which we'll talk about in a few minutes, are very much needed. The efficiencies and the scales that and the automation that we were able to provide are very much needed at scale for a better capital markets ecosystem. And I look forward to growing this project with our industry partners.
Thanks, Ada. I think that's actually an important part that you mentioned in terms of the role that DTCC plays in, the financial services industry today writ large, and really just how kind of, critical, but also like pervasive it is among different types of ecosystem participants. Maybe before we delve into the specific use case, maybe if I can turn it over to Mark and Maredith. You guys represent, the buy side asset managers, not only in this POC, obviously, but also just in the financial services industry writ large. So maybe before we get into like the specific roles that your firms played in the POC and the different use cases, for our audience, let's provide a little bit of background for those who might not necessarily be familiar with like the traditional dynamics between investment and wealth management firms like WisdomTree and Wellington, and sell-side firms like Citi, or even infrastructure like DTCC. So from your perspective, would love to hear, and to level set, like, what does this relationship traditionally look like? And then we can go from there in terms of the POC itself. Mark, if you want to start and kick it off.
Yeah, I was going to offer it to Meredith, but I'm happy to kick it off. Yeah, so I mean, we're an active investment manager, and so our product is our alpha. It's our process internally and our people internally, where we're generating superior investment ideas. We've got a uniquely collaborative environment. There's a lot of information sharing and a lot of tools that are built and deployed internally on a proprietary basis for our investment managers and our analyst team to come to the best decisions and put together the best packaging, and then get that alpha directly delivered out to our clients. We've got a long history of doing it successfully, and when it comes to sort of the ecosystems, it's basically upstream and downstream for us. And so access to those investment opportunities, research around those investment opportunities, that's where we collaborate with the sell side, and we have strong relationships across the street with all of our major partners. It's something that we hold dearly within our walls, because it is such a collaborative nature working with them to make sure that we're able to deliver superior investment results down to our clients. And then as it pertains out to where we distribute our products and into the wealth platforms, again, it's very much a partnership effort to make sure that we thread that needle between delivering to the end client the exact portfolio composition that they're looking for, the risk and return structure that they're looking for, but at the same time creating a scalable model on our end so that we're able to keep costs down and pass on as much of that outperformance as we can to the end investors to help them achieve their investment goals.
And I'd agree with Mark from a collaboration and partnership perspective. I think from an ETF issuer side, it is a little bit different than the active management side specifically. But I do think that there's an opportunity here where, for what this POC really showcased, was around a new role for WisdomTree to take as well. So while historically with how we work with Citi would be an ETF issuer, working with the wealth management platforms, having our products be listed on those platforms and then distributed through to the wealth management channel, this really opened us up to a new platform and a new opportunity to be that platform of distributing products. So Citi through Wellington and through Citi products to our end clients as well. So really shifted the narrative in terms of what roles you could take potentially, and that's how this technology is really interesting. I would also say too, from a WisdomTree perspective, this enabled us from an identity, and I'm sure we'll get into this, but to think about identity, to think about owning the client and what that looks like, which is really interesting. And finally, I would say collateral, which is, I'm sure Ada will cover on the third use case that we did here and tested it out. That's something that's brand new for us. So while traditionally within the ETF issuer range, we're working with wealth management platforms distributing our products, this POC enabled us to open up 2-3 different types of opportunities for us to not only reach new customers, but also perform new services to those customers, which we think is really exciting to what that could mean for the end investor, because they can go into different routes. There's new optionality into what that could look like, and the opportunities are really endless.
And Meredith, I was going to say, hold that thought. We will get into all of those things.
I'm sure we will. Yes, I know. I'm jumping the gun here.
No worries. And then I was going to say, Ioana, if there's anything you would add from your perspective. I know you mentioned a lot of kind of what you guys are driving forward is dictated by your clients' kind of strategies and needs and requests. So would love to hear your take as well.
And I was going to jump in anyway. So all good. I think these were such interesting points made by Maredith and Mark that really resonated with me. And by way of kind of background, prior to my current role around blockchain and digital assets, I was in an advisory role around fintech innovation, working with investment and wealth managers. And I think a lot of what I heard around this kind of growing customer centricity, if you will, of investment management really resonates back, right? And the push to own the end investor, what Maredith mentioned, Mark, you kind of alluded to kind of hyper personalization or at least mass customization is certainly, I know, from my own experience that these are kind of critical themes that is very important for the buy side to address, and then kind of in turn they reverberate back to us, right, as a service provider to the buy side. I think what is really interesting now, and this wasn't the case a few years ago when I remember first started talking to clients around blockchain and tokenization and the potential opened up by this, it was all kind of very, it was interesting. And kind of people saw the opportunity, but it was very conceptual talk. But now it's clearly kind of, as we demonstrate today, it's clearly in the rest of the industry, it's moved on to a different level in terms of actually providing potentially tangible solutions to some of these problems. Now, kind of coming back to what this means for the role of service providers like us and the sell side, I think one aspect that we often think about within Citi is as we see this emergence of digital networks that crystallize kind of in parallel to your traditional networks. What role can we play in terms of actually providing access and standardization and sort of an integrated operating model, like we like to call it, for our clients that can basically make it easier for them to access these new distribution paths that I think Mark called them earlier, very, very eloquently. And the other piece is, as kind of Maredith mentioned, I think, personally, we just need to be constantly experimenting and understanding how our role can shift even more broadly at these potential new industry dynamics can emerge, and then people can play kind of different roles across the value chain. I think that thinking is very early stage, but opportunities such as the experimentation with the POC allow us to at least start having that dialogue.
Yeah, too. Ioana, you said it great, but I think it really touches on the power of the partnership that we have. So, we're looking at a new space and a new technology, and for us to try to go down the path of testing out that distribution channel and building the capabilities internally ourselves, like that's a pretty big hurdle to overcome, and it would take us a while before we were even confident enough to move into the space. And who knows if we're too early or start to get there too late. And by Citi stepping forward and centralizing that service and allowing us to outsource a lot of that technology into their capabilities and having them standardize that and giving us the faith and confidence that we can enter into this new market space and start to test the rails without having to take on significant amounts of new operations, really again just shows the power of the partnership.
So let's now actually get into the proof of concept and the 3 different use cases that you guys operationalized. Maybe Ioana, if you want to kind of level set in terms of, what was kind of the synthesis of the POC overall? What were the 3 different use cases that you drove forward with the partners here? as well as, the motivation. I think we alluded to some of it, in our introductions and earlier, as well as maybe what were some of like the real world pain points that you were looking to address, or potentially the new opportunities that you were looking to kind of open up. And then would love to hear, from the rest of the group as well. But maybe Ioana, if you want to kind of level set and what that looked like.
Happy to kick it off, and then would love to hear other thoughts as well. From our perspective, as I think it's evident, we were very excited to carry out this POC in collaboration both with a number of key clients, as well as clearly kind of thinking about Wellington and WisdomTree here. Also, ABN AMRO was another party as part of this, and the digital platforms, right? So Ava Labs and now DTCC Digital Assets, and then Tokenize as well, to Tokeny as well, to essentially start previewing how traditional assets, or real world assets, as now they're often referred to, could actually be brought into the digital networks, and start understanding some of the potential workflow efficiencies, but also I think importantly, and what I alluded to earlier, and Maredith as well as part of her discussion earlier, these net new capabilities that could be enabled by this underlying infrastructure. And importantly, the rationale for the POC and the use cases that we chose in particular were to support better serving our clients, essentially better support their own clients. So kind of through that value chain, through the opportunities potentially provided by distributed ledger technology. And in addition to the inefficiencies that I think we've already kind of touched on, so I'm not going to get more in depth now, there's also sort of a sense of what I call potential missed opportunities in terms of these new distribution paths that Mark mentioned, and also how assets could actually be deployed and transacted onto the networks. So in terms of kind of the rationale, I would say that was at the core. In particular, we chose to focus on private markets because it's an over $10 trillion asset class size today. So it's a key asset class, given the amount of capital that is actually rotating into private markets and the level of returns that we've seen, but also the more limited access that I think I don't need to kind of get into further as part of the group. So, the infrastructure kind of suffers from a greater extent of the operational inefficiencies that we mentioned earlier. There's kind of lack of standardization, lack of transparency and look through. There's kind of both problems on the supply side as well as kind of the demand side in terms of the access and the investment minimums and the requirements, I would say, important to access those kind of products. So for example, as we'll talk about later, kind of certain requirements around the investor and characteristics that need to be met from a legal and regulatory standpoint. So this is the first area that we decided to address as part of the POC in terms of kind of the rationale and the context for this, because of the necessity and kind of just how pressing the pain point was, but also we saw it as a template where we can actually learn and apply a similar mental model to other asset classes in need. In terms of the POC, and what it consisted of. So at a high level, we mapped and simulated how we thought about an end-to-end issuance and transfer workflow. And I think the kind of end-to-end piece is a critical one to emphasize here, because we really wanted to have that kind of bird's eye view of the end-to-end story around how a traditional private asset under custody could actually be tokenized and issued onto a DLT network, and then also evaluate in the meantime parameters around compliance, investor requirements, distribution rules that would become embedded into the smart contract and enforced only through the smart contract at the fund unit or the ownership level. So we kind of mapped out and simulated this end-to-end workflow. And in terms of kind of use cases, as you alluded to kind of 3 of them, we tested multiple scenarios of transfers with the Citi smart contract kind of being in control and then relying on identity. I'm sure Maredith will talk more of that since you already mentioned it, identity credentials that were issued by WisdomTree. We also demonstrated these new capabilities through the lens of the POC. I'm sure that the DTCC and Ada can talk a little bit more around the specifics there. In terms of specific steps, and then I'll kind of pass it on to others because I feel like it's already been kind of a long story in terms of the rationale and the high level view and the specific steps. But in terms of the specific steps, right, there was a Wellington private equity fund as the underlying asset, investor in the fund represented by ABN that I already mentioned, and WisdomTree, kind of the wealth platform, onto the blockchain network. Citi's role was specifically around the issuer's agent. So I mentioned already the Citi issued smart contract that basically controlled the movement of the token. And DTCC also deployed essentially a automated lending use case, also leveraging smart contracts in partnership with Wellington and WisdomTree. And of course, you guys were the infrastructure provider. Clearly kind of important role from the blockchain network standpoint. And I'd be remiss just kind of finally, as part of my enumeration, to not mention Tokeny, who I mentioned also briefly earlier, through the lens of their on-chain ID framework, which is fairly well known amongst our audience probably, and utilizing that to look at digital identity solutions from an early stage standpoint. So lots of different things basically plugged into this end-to-end workflow for the token that I mentioned earlier.
Yeah, I think it's really, I mean, everything you mentioned, obviously, I find fascinating, but in particular, I think one of the things that you alluded to from a private market standpoint, a lot of different financial services institutions are looking at private markets from a tokenization perspective in the first instance, because of, again, some of the things that you mentioned around lack of transparency, non-standardization, high investment minimums, and, tokenizing and putting a lot of these things and capabilities on chain doesn't obfuscate the laws, rules, and regulations that govern them, but it provides a more technologically kind of updated way to manage a lot of those risks and ensure that, that they continue to kind of abide by those laws, rules, and regulations, but in a more kind of programmatic way, which I'm sure we'll get into. But I definitely want to hear from, the other kind of panelists here in terms of, what motivated you guys, the role that you played. I know you all had kind of alluded to some of these things, but just next on my screen is Maredith. So maybe if you want to jump in and kind of provide your perspective, that would be great.
Sure, and I think Ioana covered it really well. I'd just add from why we were interested in this is to that shifting roles. I think that was really interesting for us. And this really, I love this proof of concept because it really showcases the power of smart contracts and what that means. And Morgan, to your point, there's a lot that can be put into a smart contract. And I think so many people mistakenly think it's an if-then, and that's all that it can do. And actually, there's a lot that can be built into that. And especially when you're dealing with something like private markets, or even for the automated lending use case, it's really critical that there's actually many, many factors and many boxes that need to be checked or not in order to execute those from a traditional finance perspective. And then those can be automated to a degree within the smart contract, which I think is really interesting. So for us, it was an opportunity to really be able to work with everyone here on this call, but also push the envelope in terms of the art of the possible, and to be able to show that a fund share can move from a private chain onto a public subnet, and then from a B2B perspective, and then be sold to an underlying client that then could be transferred to another client, and all of that compliance could be maintained, is really, really cool to us. And I think showcases a lot of opportunities of what that could mean for just even tokens being able to be traded on chain, moved on chain. We're not there yet from a regulatory perspective. Obviously, that's the asterisk in all of this, but to be able to demonstrate that it is possible is what really excited us, and why we were looking forward to joining.
That's a good point in terms of the, more than just the if then. Can you maybe just touch on some concrete examples, whether in the digital identity part or others, that you guys kind of saw programmed into the tokens, right? The tokens weren't just representations in and of themselves. There were key kind of restrictions and things that exist off chain that were embedded. Maybe just talk at a high level to like what some of those were.
So, and Mark, and you want to also jump in here too, because obviously Mark, it was the Wellington Fund, but in terms of non-US investor versus US investor, qualified or not qualified, capital calls, I'm trying to think off the top of my head. I think we had 12 different attributes that we were able to encode there. So I'm sure Mark and Ioana may know them off the top of their head, but there's a lot that you can build in. And I think it's those specifics from a regulatory perspective that are required, right? This is a requirement that needs to be done. That is, we're able to build those in. But Mark, do you remember a few of the other ones maybe, or you want to?
And feel free, Mark, to jump in with anything else that you want to, contribute from a motivation perspective as well.
Thanks. So just taking a step back to what we were saying earlier, Ioana mentioned $11 trillion in the private markets currently growing. And just stating the obvious, but like more and more companies are choosing to sort of stay private. The bulk of investment gains over the last decade were in private markets relative to public markets. There's a great opportunity, and as Maredith pointed out, there's a lot of barriers to entry, both from onboarding frictions as well as investment minimums in order to get into a vehicle. And so the soapbox issue for me that we tackled within this proof of concept is we democratized access. We're creating the capability to put these products into the hands of more investors so that they can achieve their investment goals throughout their lifetime. And I think that that's really powerful. When you tokenize something, you're able to fractionalize it, and that fractionalization means that whereas today you might have an investor that maybe can surmount the investment minimums to get into a private asset fund, but then they can only hold the one because it dominates so much of their investment portfolio. Fractionalizing it, now they can have a more tailored approach. They can move allocations, around much more efficiently, and it just gives them a much more robust portfolio capabilities. And so that was really special for us. And everybody keeps talking about embedding compliance within the asset itself. Can't say that enough. Like that is really one of the more powerful things that this technology brings to the world. To Meredith's point, I opened so many eyes, people's jaws dropped internally, and I think as well externally, but internally, when I showed the series of paths that we took, where it was, is the investor, where is their domicile, what is their accreditation status, and then did the transfer succeed? And we just showed the series going through them of the successes and failures, and it was like, wow, that's really impressive, because that's a process that, it could take weeks or months in order to achieve those things in the analog world. And here we are syncing up smart contracts, digital identity, and making that an atomic process, which really breaks down the frictions and, helps us do what we love doing the most, which is pass on as much of that investment outperformance to our clients as possible.
Ada, you want to add in?
Yeah, definitely. So I think what Meredith said about the ability to emulate really how capital markets work today, where you have multiple participants and they all have sort of their rules or their operations and processes. But today it works, right? Like there's messaging systems and different participants or different so the sell side and the buy side communicate with each other. The challenge that we've had in the digital asset space is how do we form and standardize this communication form so that true liquidity and true capital markets operations reflect on different blockchains and are reflective of different processes that each individual in the company has, right? And I think one of the things I know one of the things I'm most proudest from this POC is the ability to replicate that, where we were able to have Citi issue a fund for an asset manager. That fund was traded on a wealth manager platform, and then that asset was used in a collateral, in a lending transaction. And all of that was done because of smart contracts and because we were able to figure out how to make those smart contracts and different chains communicate with one another. In use case 3, one of the things that we did was, we were sort of separated from the issuance component and then the trading and secondary markets component, but our participation as the DTCC Digital Assets was the ability to take on that asset that was created and traded, bring it onto another smart contract, which we call a lending smart contract or a lending pool, and emulate a transaction that has all the workflows and all the operational processes for an actual lending workflow to happen, as well as the collateral piece. So using one of our tools, we were able to map out things like build blocks of smart contracts that replicate processes such as the enablement of a loan request, deposit and withdrawals of lendable assets, the delivery of collateral, and the NAV pricing. And all of these scenarios were tested in our workflows based on the criteria that we had set up. And that to me was extremely, extremely powerful.
Thanks, Ada. I definitely do want to get a little bit more into kind of comparing and contrasting what that particular process looks like off-chain and in the traditional world today, to really kind of get a sense of, how this combination of tech has upgraded that capability. I know, Mark, when you just kind of reviewed certain examples around, ensuring investor suitability and capital calls and identity and all these things, like, I'm sure this group can collectively attest to the fact that manually today or via Excel spreadsheets, that's done today in the traditional financial services space and takes many, many people, many Excel sheets and a lot of manual reconciliation. And those are that you gave really good concrete examples of how the combination of this tech can really just upgrade that process. Similarly, from a lending capacity, especially when we talk about lending against private market securities, would love to hear your take, and whether it's Ada or from the broader group, can people borrow against private market securities today? If so, like how frequent is it, or how much can this kind of tech really open up that capability? I know, again, Ioana, you were talking about new capabilities, new business models. So I'd love to delve a little bit more into the details around like, how revolutionary is this? Because we talk about collateral on chain all the time, but like, would love to hear from your guys' perspective in terms of how painful it may or may not be today, and how this tech can really upgrade what that looks like.
I'm happy to jump in. I mean, this was the thread of the proof of concept that we did that I got really excited about, and so I'm happy to kick it off. I think there are certain relationships that people have with their investment management platforms where they can take loans out against their existing assets, but it's not something that's broadly available to the mass market. And what we showcased here is the capability of bringing that to the mass market in a scalable and efficient way. Again, as you alluded to, there's a lot of examples of this in the on-chain finance world, but as Ada was mentioning, DTCC showcased the capability to really wrap a lot of compliance and regulations around the process to make sure that it fits within the existing regulatory framework, which I thought was really powerful. To bring this home, for the people who are listening, if I had a child that was going to college and I had to pay that first tuition bill tomorrow, generally for me and for the peer group that I hang around in, that's going to look like, oh, I've got an investment vehicle over here, I've got a fund, I'm going to sell that so that I can take the proceeds and go pay off the scholarship bill. That's not how everyone operates within the world. There's many people who have the capability of pledging that asset as collateral, taking a low interest loan off of it, and that allows you to maintain the upside of the asset that you've got while still satisfying the loan, the scholarship obligation, and pay the loan off over time again with a low interest rate. That's not a service that is easily available to the entire world today until you bring in this technology disruptor. And so now, as a holder of an asset that would be accepted within DTCC's facility, you could pledge that, you could take a low interest loan out, and you could go pay off that that scholarship bill. And then on the flip side, you could be somebody who holds money in a savings vehicle on a platform like WisdomTree Prime, and maybe you're earning the current treasury yield rate of 5%, and you don't need that money anytime soon, and so you can pledge it for someone else to take as loanable assets, and you can earn a couple extra points of yield on it. It's a collateralized loan, so your risk is pretty low, and in the event of default, and it basically it's a win-win for all parties that are involved. I think that a lot of times when we talk about tokenization, people will say, well, why would the end client want a token? What's going to drive clients over to a token-based world as opposed to the analog-based world that they're in right now? And, we talk about like, well, we have atomic settlement, we can embed compliance controls. And they're like, yeah, but I mean, the folks that are in this panel today can tell you that we've all operated also under the guise of like, let's just get to that point where we create the vehicle and then we can show you what you can do with it. And that's what we did at the end of this proof of concept. We showed you just one of the many things that you can do with a token that you wouldn't be able to do in the analog world to open up those capabilities for mass adoption.
I completely agree. And I that's why, Mark, I wanted you to go first, because you are so passionate about this one. I knew I could not do it justice. I would just add, and it's really just underlining points that Mark made before around democratization. So this is, again, bringing more institutional type of products and services to the masses, whether it's through fractionalization or through collateral, but also around this whole concept of utility. And this is what Mark was saying at the end there, just really around, okay, so you tokenize it. What can I do with this token? What does this actually mean? And this is a great example of utility. And I loved some of the examples of paying off a college, first year tuition, or could it be something else, buying a house or a car, whatever it might be. But being able, I think a point around tokenization and blockchain that's so important, it's about putting the power into you as the consumer and allowing you to operate in the way that you want with your money. And that is a different way than you might do today. But thinking about, okay, I don't have to sell out of this asset. I don't have to then wait 2 days. Then I get the cash. Then I wire it out. It's about, okay, now I can take a loan off of this. I can use it for collateral. My opportunities are really endless of what this could mean. And obviously with a risk managed thought to it and make sure it works for you, et cetera, et cetera. But I do think that it's that utility point that's really exciting about what these tokens could eventually do and mean, and how that could change your end financial life is what excites me, at least as we start to build here.
That's exactly right. And if I could just add to the benefits. So the benefits that both Mark and Maredith mentioned are from like the consumer's point of view, but then there's the asset servicer themselves, right? That is thinking about, all right, where am I saving costs or time? One of the things that we noticed in the POC, I mean, in collateral, and I know this is proven before in the industry, but the ability to operate both assets on the same rails, and then when a collateral event is triggered, have the ability for the assets to exchange or settle atomically against each other is huge. That delivery versus delivery settlement mechanism, if translated into real capital markets operations, that saves banks so much more capital and so much and induces so much more liquidity into their systems, that it's something that will be super beneficial once implemented at scale. That was something, that was one element for asset servicers that when we realized that, we're truly excited about scaling that.
I think I'll quickly jump in, and I'll be quick because I don't think I have much to add. I think people articulated the potential benefits and the potential of this more broadly, very comprehensively. I think to me, what will be really interesting is basically kind of observe over time and experiment with all of the different kind of permutations of the different benefits that people articulated, right? Because utility, efficiencies in asset servicing, which might not be kind of immediately tangible to the end investor or visible to the end investor, but could obviously enable that utility, kind of the many different ways in which an asset can be used, how it can be ported across different networks. There's almost kind of a constellation of different things. So it's basically like how you're going to put these things together over time, and potentially how the benefits could end up multiplying. But we'll have to see how that plays out.
Yeah, and I think, you know, Mark, you mentioned the idea of like migrating to or becoming comfortable with like a token ecosystem. And I think I will say over time, and I think you guys would agree, that the infrastructure and UX is and has been improving such that, you know, I know different kind of infrastructure and service providers are increasingly working to really obfuscate away tokens and all like the Web3 kind of frictions and components, such that frankly, from like an end user perspective, they shouldn't care or know, right, that something is tokenized on blockchain. You know, obviously people don't necessarily know or need to know like the ins and outs of what's powering email protocol, but they know how to use their email, right? So to the extent that, you know, to Maredith's point, you can realize certain utilities and it just so happens to be enabled or powered, right, by this technology, I think that's where we're all trying to get to. But I think also, Mark, you mentioned the idea of education. Like it's just going to continue requiring a lot of education, obviously, from your sides, from our side, from the industry at large. But we're getting there, and we're definitely progressing in the right direction. The one thing that I would maybe just transition to now, if we could talk a little bit about more of like the technical components. I know we reviewed at a high level, you know, the components from a risk control and utilities perspective that you guys were able to kind of embed in the tokens themselves. Can we talk a little bit about some of the considerations that you all had specifically from a blockchain perspective? And obviously, ultimately, that led you to build on Avalanche and on Avalanche Spruce. For those who might not necessarily be familiar, Spruce is a test network. It is an Avalanche subnet that is meant for, you know, traditional buy and sell side institutions and service providers. It is a permissioned environment that really kind of fosters, you know, institutional wholesale banking, capital markets types of use cases, whatever is top of mind for our partners to operationalize. But would love to hear from your perspective. Obviously, it means a lot more coming from you guys than from me. What it is that kind of led you to build on Avalanche, and what that looked like, what that experience looked like. You know, I'll toss it up. Whoever wants to kick it off. You know, happy to get it started.
I'm happy to start, and I think Morgan, it would be great too. If you could talk about what it means to join a subnet as well, because I think for us that was really critical in terms of what it means from a lift, but also that it is permissioned. And I think that also meaning Mark and I know each other. We are aware of who each other are. We are all KYC'd. So within this subnet, this pool, we are all, we're known counterparties. And especially from the traditional finance perspective, that's really important. And if you start to think about scale, I think that's another question that comes up. Okay, how are you going to scale this? How do you think about, you know, massive amounts of volume? That's where that known counterparty is really important when you start to talk about massive amounts of trades. But so that's from our perspective, and obviously you're great to work with, but would love to hear what that means from your side maybe, and that would help frame what exactly a subnet is, and what it means to come on.
Yeah, happy to level set. So for those who might not necessarily be familiar, Avalanche is a broad-based like layer one network of layer one networks. Each of the networks are called subnets or subnetworks and can be kind of customized across a whole host of different parameters that are really kind of optimized and fit for purpose for different types of use cases. So obviously, if you're a gaming company, or if you're a regulated financial services institution, or if you're a government agency, you're obviously going to have very different kind of use cases and applications from a blockchain deployment perspective, and therefore different considerations and customizations as it relates to your underlying blockchain infrastructure. So with Avalanche Evergreen Subnets, which is kind of the broader umbrella of subnets meant for financial services institutions, we deployed Avalanche Spruce, which, you know, to your point, Meredith, is a permissioned environment where all buy and sell side participants have gone through a KYC and onboarding process. But what's more, there's permissioning at kind of 3 different levels. There's obviously permissioning at the transactor level. There's permissioning at the smart contract deployer level, meaning who has the ability to actually deploy different applications and smart contracts on the network, as well as permissioning at the validator level. The kind of network overall has, you know, transaction privacy limited to the institutional participants. It is an EVM-based network, so anything that is you know, deployed on any other EVM-based chain, whether it's Ethereum or Hyperledger or others, can very easily be deployed here. And then importantly, does not use, and even though it's you know, there are valueless test tokens in the network, does not use the native token of the network Avalanche as gas, right? So there is another token that is used, which helps to address particularly banks' inability at this point really to hold crypto. So at a high level, that's kind of a description of the environment, but obviously would love to hear from your guys' perspective as well.
Yeah, you know, for me, I always find value in analogies and describing things. And so, you know, in canvassing the space of blockchains, you know, over the last couple of years, there's been this sort of idea of, well, are we going to build on intranets or are we going to build on the internet? And there's a lot of passionate arguments out there for both sides of, you know, building on the intranet versus building on the internet. But we know, you know, where the market moved. But then beyond that, what the Avalanche Subnets mean to me is a password protected website. And that's where financial data and financial information and financial transactions ended up moving towards when we had the first internet revolution. We moved towards password protected websites. And, you know, in this case, we have also password protected assets themselves. And so, you know, when Morgan, we first met and, you know, started discussing the scaling strategy and the subnet strategy and how that operates, it spoke to me, it resonated in terms of, you know, a viable path forward to have, you know, compliant financial transactions that could benefit from this new technology on chain. And, you know, Avalanche itself just ends up being, you know, like Ioana said earlier, the infrastructure provider, but your team has also been great in collaborating with all of us and, you know, helping us to further understand all of the full benefits of the technology itself.
I agree. The concept of a permissioned access to the chain is key for financial institutions. That's something that came up internally for us as well when we were discussing the deployment of smart contracts, the deployment of the SEC lending smart contracts on-chain and collateral management. The other thing that our technical team noticed, our technologies or our products are blockchain agnostic, meaning that we can deploy our technologies across the different chains. One of the things that our technology teams or our blockchain engineers were really happy with was speed of transactions. That was one thing that they noticed and they wanted me to highlight, as well as the ability to scale.
Awesome. Thank you both. Appreciate it. Yeah, I think, Mark, that's actually, well, Ada, you kind of made a reference to the Avalanche consensus, which I feel like doesn't get enough airtime. Like, yes, there's sub-second transaction finality, which is important in general, but particularly important when you talk about atomic settlement, atomic DVP, and financial services transactions that potentially require either high throughput or you know, involve high value of transactions. So definitely want to give that the airtime that it deserves. But also, Mark, what you were mentioning as it relates to, you know, websites, the idea that Avalanche has always been this natively interoperable kind of internet of websites where assets can move from website to website in a way that kind of doesn't rely on additional third-party trust assumptions, I think is very powerful. And hopefully we'll start to see the proliferation of that going forward. I know we have a few minutes left. Would love to hear and maybe throw it out to the group in terms of just where are we taking this from here? What's next? What can our kind of audience look out for from potentially each of you or from this use case? And then we can close it up. So maybe Ioana, if you wanna kick that off, would love to hear from your perspective, and then if anyone else wants to jump in, please do.
Sure, happy to kick off because we're coming towards a close, right? So in terms of what's next, right? I think for us, we're looking to continue to work with our clients in terms of issuing and administering and accessing tokenized assets, kind of per the earlier point, in an increasingly scalable manner. I forgot who made that point, but I think the word scale actually came up multiple times. While I think providing that level of interconnectivity and portability across these analog and digital systems and networks. So that's kind of the overarching goal. I think, we and what we hear also from our clients is kind of a consistent theme around digitally native kind of blockchain issued and enabled assets. And I think we kind of see that at the end state as well. And then at the same time, we also see kind of a transitionary period between where we are today and basically tokenizing existing real world assets, bringing them on chain to facilitate the broader adoption and the broader uptake and kind of build out the ecosystem. Which is still early stage. So this is broadly kind of how we're thinking about this. In terms of what was valuable for us from the POC, there was obviously a lot of value in the kinds of things that we already discussed so far, understanding the technology, starting to actually get deeper into some of the operational and legal frameworks, which are critical in facilitating this adoption, as well as ultimately potentially getting to that digitally native state. It was also very helpful for us in actually surfacing the kinds of things that we as an industry still need to work on. So that was another key consideration. So, we mentioned digital identity and kind of nuances and angles around it. There's kind of new developments every month in that regard, right? Thinking about how to actually better facilitate the liquidity on chain, because right now there's in kind of pockets and it's still fairly fractured. How to be more sophisticated around capital calls implementation on chain, right? So a lot of different things that kind of came together as part of the POC in terms of this is kind of what we know now, and these are areas that we need to work on as an industry to basically facilitate this transition.
That's right. And if I could just add to what Ioana said, the point that you made, Ioana, about legal framework and compliance framework, that's key. And I think that's the next frontier. And I loop that into a bigger umbrella that I call user experience, because in addition to legal and compliance frameworks, which will help internal teams within each organization better understand and better adopt blockchain technologies, there's also the user experience of how you interact with tokens, with wallets. Right now, we're professionals in the digital assets industry, so we're more comfortable with it. But at mass scale, I think our journey will pivot to user experience and make that technology much better, more consumable for users. One thing I wanted to add for the DTCC Digital Assets, the workflows that we built centered around collateral management and lending, that's something that we as an organization want to scale out to a lot more clients. So we'll have more announcement coming about how different industry participants can test out that workflow. So I just wanted to make a plug for that we'll make some announcements soon.
And I'll just add, I think to your point around actually making this technology accessible to the masses is a problem that we're also working to solve too. So in addition to everything that's already been noted, we're also launching WisdomTree Prime, which you can download. It's in about 40 states just for the US retail population at this point, but it does help solve that accessibility question too around what do you do with your tokens? How do you manage them? Are they safe? So download that app, and it combines saving, spending, and investing, and also includes utility of being able to use these tokens for your everyday financial life. So looking forward to that too. That's really our big future. And then later in the year, we're also going to be announcing an institutional B2B platform as well, for businesses to be able to interact with tokens too. So we're looking forward to that.
So much alpha here. Mark, if you want to wrap us up.
My primary objective remains to educate. And so, I'm still going around internally, externally, but focused internally to just tell people, showcase what this technology can do. I don't have all of the answers. I don't know of all the permutations for things that we're going to be able to do and have the potential to do with this technology and in this new world. My job is to go to subject matter experts in all aspects of our business, whether it's technology or client servicing or distribution, product creation. And, what I do know is I know how the technology works, and I know, the capabilities that it can deliver. And so educate them on what this is and allow their brain and their expertise to sort of take it to that next level and, and see what we can harness.
And that kind of takes us back to the whole hub and spoke idea, where this tech is just so pervasive, really, like in so many end-to-end business services and processes that, it's important, to your point, to educate and get internal stakeholder buy-in from different businesses, because it really is so kind of far-reaching in terms of its implications. But we will definitely have to have you all back as these various initiatives progress, and as the industry kind of addresses regulatory compliance and other challenges, and really kind of opens up, hopefully, the floodgates in terms of different opportunities that ultimately will benefit end clients and investors. But with that, thank you all so much for joining today. It was an awesome session. I had no doubt that you would all have a lot of valuable insights to provide. So thank you all for joining. Thank you to the audience for joining this Powering Business with Blockchain. Again, the recording will be made available in the coming days. And with that, thank you.